For decades, Micron Technology has operated as a foundational manufacturer of DRAM and NAND memory. They build the physical hardware that stores the world's data. Historically, the semiconductor memory market is a brutal sector to operate in. It runs on a vicious boom and bust cycle, dominated by a handful of global giants fighting for margins. Then comes their Q3 2026 earnings report. Micron stock is trading at $878 a share, pushing the company to a $1 trillion market cap. How does a legacy hardware manufacturer increase its revenue by 400%? GAAP net income stands for Generally Accepted Accounting Principles. It represents true operating profitability, the actual cash the company keeps after subtracting the cost of goods, operating expenses, and taxes. Micron achieved an 84.6% gross margin on these sales. When a company scales revenue by a multiple of 4, but operating expenses remain flat, that massive difference drops straight to the bottom line. Maintaining an 80% operating margin while shipping millions of physical units represents a level of profitability usually reserved for software companies, not silicon fabricators. Generating this cash is only the first step. How leadership allocates it tells the real story. This line graph tracks their capital structure. Management aggressively paid down long-term debt, dropping it from $14 billion to $5.1 billion. Simultaneously, cash reserves climbed past $26 billion. At this exact intersection, their operating cash flow completely eclipsed remaining debt. By eliminating leverage during a peak revenue period, Micron insulates itself against future sector downturns, turning the company into an agile financial fortress. The catalyst for every single one of these financial metrics is the global demand for artificial intelligence data centers. To train and run AI models, you need specialized memory. Micron's answer to this is HBM4, high bandwidth memory built on their 1-beta DRAM technology. This hardware is currently in high volume production and shipping directly to top-tier clients. Development for the next iteration, HBM4E, is already underway, with volume production expected in 2027. Alongside their flagship memory, they are pushing shipments of 256GB DDR5 server modules and Gen 6 SSDs. By transitioning away from commodity storage and manufacturing the exact components necessary to clear the AI processing bottleneck, Micron gains unprecedented pricing power. To defend that pricing power, Micron relies on what they term strategic customer agreements. CEO Sanjay Mehrotra is utilizing these multi-year contracts to lock in high prices and guarantee future demand, effectively bypassing the memory industry's typical boom and bust cycle. This forward-looking projection chart highlights their guidance for Q4. The company expects to generate $50 billion in quarterly revenue. They also project an 86% gross margin, proving their profit efficiency is durable. By securing these long-term contracts for high-bandwidth memory, Micron has positioned its manufacturing capacity as the unavoidable gatekeeper for any major AI deployment. They scaled their revenue and perfected their balance sheet at the exact right moment. What company should we analyze next?